Good afternoon, students. Welcome back to this discussion on audit. So, I think we discussed some of the aspects related to audit of the share capital, and we also talked about assertions. Yeah, a lot of assertions we discussed related to the balance sheet, related to the P&L. Now, today we plan to continue with that. We'll pick up some more items of the financial statements, wherein we'll just try to apply the same thought process and we'll try to structure the audit procedures in relation to, again, some of those items. But quickly before that, let's do a quick recap, okay, particularly for the assertions, because assertions is very, very important. So, can you first of all tell me what all assertions do we have in relation to balance sheet? Over to you. In relation to the balance sheet, what assertions do we have? Over to you. Yes, everyone. When it comes to the balance sheet, which assertion should be considered by the audit? Can you tell me quickly? Over to you. Yeah, everyone, you're there. Please confirm. So, for a balance sheet, which assertions you will be considering? Great, I can see the response coming in now. Good. Almaz is saying completeness, rights and obligations. No, I'm talking about the balance sheet currently, Bhumika. Okay. So we'll move on to the P&L in the next question. Then Almaz says cutoff. Okay. Then Rihanna says existence, completeness, valuation, rights and obligations. Bhumika says share. No, share capital is the caption. Okay, I'm talking about the assertions. Yash is saying existence. Okay, Tanu says existence, completeness, cutoff, valuation. Almaz says presentation and disclosure. Shifa says valuation. Buma says presentation and disclosure. And again, Shifa has the same point, presentation and disclosure. Right. So again, I think this point is very, very commonly covered by everyone. Okay, great. Priyanka has also shared one response. Okay, Prem is saying existence, rights and obligations, cutoff, completeness, valuation, disclosure. All right, so now, can you now help me understand how are these two different, cutoff and completeness? Over to you. So if let's suppose you are required to compare these two, cutoff and completeness. So how are these two different? Or you can just try to explain what are the things which cutoff will cover, what are the things which completeness will cover. Yes, when it comes to the completeness, cutoff, what are the things they will be covering? Priyanka says completeness helps to give detailed information. Okay. And what about cutoff? And what about others? Rihanna says cutoff is for separating two periods so that we can estimate the financial information of the current period. Okay. And how is this different from completeness? So, how is this different? So, of course, you are explaining cutoff, but how is this different? I think response cutoff is separation between two periods. Fine. But how is that different from completeness? Over to you. How is that different? Tanu says cutoff is for the transaction period. Priyanka says completeness has all the transactions. Okay. What about others? Quickly. Completeness has all the transactions. So anyone who can just differentiate between these two? No? All right. So we'll try to discuss this. Okay, great. I can see some responses coming up. Almas says completeness looks at as to whether the transactions are fully recorded or not. Whereas cutoff is all about whether the transactions are recorded within the correct period. I think it's a good explanation. Buma says completeness is all about verification of existence of balance sheet items that should exist in that accounting period. Cutoff ensures that transactions and events are recorded in the correct accounting period. Okay, good. So I think it's also explained by Priyanshi, which is about completeness. Okay, good. So I can see some more responses coming up. Sorry, I have missed out on some of these responses now. Okay, now moving further. Can you now help me understand what all assertions do we have in relation to P&L? In relation to P&L, what assertions do we have? Yes. When it comes to the P&L, okay, good. Tanu says occurrence. Very good. What else? And what others? Buma says occurrence, completeness, cutoff, measurement, presentation, and disclosure. Okay. Rihanna says occurrence, cutoff, measurement. Almas says measurement, cutoff, completeness. Good. So now here again, can you explain how is this occurrence different from the completeness? Anyone who can just explain this, that how is this occurrence different from the completeness when it comes to the P&L? Okay, so in the context of P&L, you can explain this. How are these two different? How is this occurrence different from completeness? Okay, great. So Priyanka is saying occurrence means recurring transaction, whether completeness, whereas completeness talks about the brief of transaction details. Sure. So let's do a quick revision of some of these assertions. See, when it comes to the completeness, please remember, completeness, as the terminology suggests, completeness is all about ensuring whether the transactions are completed or not. Okay. And whether they are completely recorded during the year or not. Yeah. So if you're talking about a balance sheet item, so you will say whether this entire balance has been captured or not. When it comes to the P&L items, you will say whether all the transactions have been captured or not. So that's the understanding of completeness. Understood? Cutoff. Cutoff, you can just, maybe sort of identify. Let's suppose we have this line. You draw this cutoff somewhere over here. Why? Because that is where your period ends. So in the exam, this is how you need to remember this. When you will draw a line, okay, when you divide this into two parts, on the basis of what? Reporting period. That is what you call as cutoff. Okay. Next, existence or occurrence. See, existence again, as the terminology suggests, it talks about whether the item exists or not, or the asset exists or not. But when it comes to the occurrence, you need to just check whether the transaction has occurred or not. Okay, so occurrence cannot be there for a balance sheet item. Yeah, you can think about it. Huh? For an asset balance, for a liability balance, occurrence is not possible. It doesn't make sense. Yeah. Similarly, for a transaction, existence doesn't make sense. Yeah. So that's how you need to understand this. Next, talking about valuation or measurement. This is quite easy because in a way, this is talking about the amount involved. It's all about the amount involved in the transaction. Okay. So when it comes to the balance sheet item, what is the amount? Okay. Or whether the amount is correct or not. That's why it's called as valuation. When it comes to the transaction, again, it talks about the amount or whether the transaction is recorded at the correct amount or not. Yeah. Rights and obligations. I think we talked about this quite in detail in the previous session, that this is something you'll always have for a balance sheet item. So this is something which you will have exclusively for balance sheet. Okay, for P&L, it will not be there. Why? Because it is only talking about rights, and over what you will have a right. Right will always be there in respect of an asset. Similarly, obligation will always be there in respect of a liability, not otherwise. Yeah, so this is how you need to understand this. Okay, then talking about presentation and disclosure. When it comes to the presentation and disclosure, so presentation and disclosure is all about the classification. Means in the balance sheet, where do you present it, where do you classify it, in the P&L, where do you present it, where do you classify it. Similarly, when it comes to the disclosures, now disclosures could be there for the balance sheet item, similarly for the P&L items. So for both of them, okay, what are the things, what are the explanations which are required to be provided? Yeah, so some of the assertions by their very terminology are quite easy to understand. Yes or no? They are quite easy to understand, but some of them may not be easy, or there could be sort of, difficulty in terms of getting to the point. So that's why every time when you come across any such sort of situation wherein you are required to write down the procedure, so please remember that procedure always need to be linked. They need to be in reference to the assertions. Only then it will make sense. Understood? Yeah. Only then you will be able to, in fact, explain them better. Yeah. So that's how we need to approach this. Okay. All right. So Priyanshi has a query. Priyanshi is asking, sir, rights will be used in the balance sheet in respect to check existence of the assets? No. These are two different things. And let us take an example to discuss this. Okay. So now, let's suppose a company has an inventory. Let's suppose company has an inventory. Yeah. Now, this inventory is appearing in the balance sheet. Let's suppose this inventory is appearing in the balance sheet at 10 crore. Okay. Now, for this 10 crore, two things are required to be checked. One, whether the company has a right towards this inventory or not. Means if the company has an asset, so right towards that asset should be there with the company. So if the company has an inventory, so right towards this inventory should be there with the company. Yes or no? Yeah. Now, this right, how do you establish this? You can say if the goods are purchased in the name of the company, then the right towards those goods will be there with the company. So, how will you establish this right? So, you can say through purchase invoices, we can establish this. Okay. Next, when it comes to existence. Now, the question arises that in respect of inventory, are the goods physically there with the company? And if those are physically there with the company, then you need to go check them. Yeah. So, what is your concern? What is the point that you are trying to check? Whether the goods physically exist or not. It should not happen that inventory is recorded in the books at 10 crore, but physically it doesn't exist. Okay. So, that should not happen. That physically it doesn't exist. And how do you check it? By doing physical verification. So, what will you do? For existence, you will do a physical verification. Because if you go verify that yes, it's there, physically it's there, then you will get the comfort. Yes, it exists. Now, in this case, if let's suppose you check the invoices, through those invoices, can we say that existence is ensured? The answer is no. Why? Because just because you are checking the invoices doesn't mean that the inventory is physically there. You are not sure. Yes or no? Similarly, if let's suppose you physically verify the inventory, that doesn't mean that over that inventory company will have a right. Maybe company is holding some inventory on behalf of some other party. That is again possible. Yeah. So that's why each and every assertion has a relevance. Plus, another point, I'm just hoping that you are now clear in terms of the difference, Priyanshi. Yeah. Plus, another point about the assertions is hopefully you would have understood this by now that in relation to every item, whether it's the balance sheet or P&L or otherwise, all the assertions need to be looked at. Yes or no? Yeah. And you can just think about it looking at this point right now. That if let's suppose for inventory, you just check the purchase invoices only. You don't physically verify this. Then will you have a comfort that it physically exists? Similarly, if you only physically verify, if this is the only thing you do, physical verification, but you don't check the invoices, so will you get to know whether the inventory actually belongs to the company, means company has a right towards that? No. So that's why each and every assertion is important to be looked at, which means auditors' procedures should ensure that all these assertions have been covered. Because if any of these assertions will not be covered, then there is a risk. Risk in terms of not checking that particular thing in an appropriate manner. Okay. Yeah. So this is something which is important, which is required to be looked at. Fine. Yeah. Any questions, any doubts so far other than this? Yes, over to you. Any questions, any doubts so far? Yes, tell me. Any questions? Any questions? No? Sure. Yeah, so I'm just hoping that assertions are once again clear to us. Okay, yeah, all right. So, what we will do today is today we'll try to think about the audit procedures because now we need to pick up line item of the financial statement, design a lot of audit procedures in relation to that. And while designing that, we also need to take care that all of the assertions are taken care of. Okay, so that's going to be a strategy. Yeah. Okay, so what we can do is let me just get on to the next line item. Just a minute. Okay, so share capital we discussed. Now, if you go to reserves and surplus, reserves and surplus, we all understand. Now, reserves and surpluses could be of various types. But generally, what do you get to see? Some of the revenue reserves you'll get to see. Revenue reserves means the profits which are earned by the company during the year and which are accumulated. That is nothing but a revenue reserve means the profits are getting accumulated. Okay, they are sort of compiled in a way, which is also known by different terminologies: retained earnings, general reserve, okay, free reserves, profit and loss account balance. All of these are what? They are revenue reserves. Correct. Then there is another category of reserves which is restricted. For example, security premium. If you remember, we talked about security premium in the previous session also, but the context was different. Okay. Now, security premium is also a kind of a reserve. Now, when it comes to the reserves, Priyanka, I'll come to your query. When it comes to the reserves, again, it's very, very important, first of all, that we understand the nature of that item. Yes or no? Because what is our thought process now? What is it that we are trying to do now? We are trying to design the audit procedures. Yes or no? So that is what we are trying to do. We are trying to design the audit procedures. And that is possible only when we have a clarity. Yeah. So if you understand that audit, how can you audit an entity without knowing the entity? Yes or no? So if you have to audit the entity, you need to understand. Yes or no? Yeah. For auditing the entity, you need an understanding. You need an understanding of their process, of their environment, of the business they are into, of the transactions they are into, okay, all the activities they are into. So that's how you think about the audit strategy, audit procedures, risk areas, okay, not so significant areas. Similarly, when it comes to the audit of a particular line item, is that approach going to be any different? The answer is no. Answer is no. The approach will remain the same. Approach is not going to be any different. Correct? So now, when the approach is going to remain the same, that is not going to be any different. So now, what is it that you need to look at? You need to look at whether you have the clarity of that particular item or okay. And why does this become important? Because here again, the strategy that we discussed in the previous session, if you remember, wherein we discussed that for designing the audit procedures, we need to know the accounting standards, we need to consider the laws and regulations, we need to apply the auditing standards. See, all of these things are only possible when you have the clarity. clarity in terms of the nature of that item. Yeah. Okay. So that's why one thing which becomes very, very important for you, that before you get on to the audit procedures, please make sure that each and every aspect related to the item for which you are trying to design the audit procedures is clear to you. If by chance there's a lack of clarity, then just take some time, think about the, you can say, the details in terms of extending your understanding for that particular line item, and accordingly you consider that, accordingly you apply that. Okay. Now let's come back to the discussion we were into. So we were talking about reserves. Okay. And we discussed that all the reserves will not be free. Some of the reserves are restricted. Now, what is the difference between free and restricted? Restricted means those reserves can only be used for a specified purpose. If you try to use that for any purpose which is not specified, then it is not permissible. Why? Because this restriction, this specification comes from the requirements of law. Okay, so this comes from the requirements of law. So that is how you need to take it. That is how it needs to be understood. Yeah. Now coming back to a couple of queries which Priyanka has shared. She is asking, sir, in examination, how to write answer up to this point? What do you mean by up to this point? Are you talking about anything in relation to designing of audit procedures? If that is the case, we'll talk about it. Okay. Of course. So we'll talk about it. A lot of procedures we'll discuss. Yeah. Second, she's asking what is the difference between reserves and surplus? So there's no difference. That's how you need to consider this. It's the same terminology. And let me just try to maybe again explain you with the help of an example. So just give me a minute. Okay, and that is where I believe the understanding is very important. Okay. So now, if you, let's suppose, look at the profit and loss of any company. So say there are two things. This is the balance sheet of the company, and this is the statement of profit and loss. So I'm moving on to accounting right now. Okay, and we'll discuss as to why does it become relevant. In the context of your query, it is relevant. Okay, so in the balance sheet, you will have reserves and surplus. Okay, so that's the heading you will have, correct? Now it will have some opening balance. Okay, then you will have some additions during the year. Then you will have a closing balance. Is that correct? Yeah. So this is how you will get to see this, Priyanka. Yes or no? Yeah. So whatever be the amount, I'm just not putting the exact amount. Correct? Okay. Now let's suppose its opening balance was 10. Okay. And the amounts are rupees in lakhs. Or let me just make it in crores. Okay. So this was 10 crore. Now moving further. See, during the year, company had some revenue and a lot of expenses. Okay. And the company has generated some profit. Okay. Now I'm just not putting the numbers. Let's suppose during the year company has generated a profit of 1 crore. Here again, figures are rupees in crores. Okay. Yeah. So figures are rupees in crores. Right. Now, in this case, this profit which the company has generated during the year, this is the net amount which the company has retained after spending everything which is required. Means after incurring all the expenses, company is left with a profit of 1 crore. Yes or no? Yes or no? Yeah. Now this is what you call as in a way surplus also. Means during the year company has a surplus of 1 crore. So what will the company do with this? From the P&L, company will say, okay, so this is the profit I have generated during the year. This will go to my reserves. This will increase my reserves. Therefore, during the year, with the opening balance of 10, company will add this profit during the year. As a result of which, closing balance will be 11 crore. Now this 10 crore, 1 crore, 11 crore, what are these? They are nothing but the reserves of the company. Okay. So they are nothing but the reserves of the company. Yeah. Now, in relation to the reserves of the company, now herein we need to understand the point that we were discussing, that these reserves may have two categories. One, which are free. Free means for those reserves, there is no restriction. Company can use that anywhere. Of course, for the businesses of the company, but company doesn't have any restriction in terms of their usage. Yeah. And when it comes to restricted, that's the other category. That will mean company can use that only for specified purposes. Okay. Now free reserves are known by different names, but over that you don't need much clarity. Why? Because what is free. Where do you need more clarity or more thought process or the understanding? That is in respect of restricted reserves. Why? Because till the time you are not clear on the restrictions which are placed on the reserves. Okay, here again, let's take examples. Say one type of restricted reserve is security premium. Okay, now we understand on security premium there is a restriction. Okay, so there's a restriction on security premium. That is what we understand. Correct? Now, till the time we do not know those restrictions, as an auditor, how will you check? How will you perform any audit procedure on security premium? Can we do that? Answer is no. Why? Because if let's suppose you are required to do audit of reserves, so what will you do? Let's think about the audit procedures. Let's suppose you are required to audit the reserves. So think about the audit procedures. What will you do? First of all, if you look at the opening balance, for opening balance, what is the audit procedure you will do? You will trace whether this opening balance matches to the previous year's financial statements or not. Because opening balance is coming from the closing balance of previous year. Correct? So you'll say this is traced to previous year financial statements. Yeah, so this is traced to previous year financial statements. Yeah. So if you do that, we are done. On opening balance, do we need to do anything further? No. Now, next will be this 1 crore. So if we have audited the P&L, of course, this 1 crore is by default audited. Yes or no? So if you have audited the P&L, then this 1 crore is audited by default. It's automatically done. It's automatically done. Yeah. And then, of course, if you do a total of these two, you get 11 crore. Yeah. So as far as free reserves are concerned, what are going to be your audit procedures? You can say tracing the opening balance to the previous year's financial statements. And for the additions during the year, you will check the calculation. Plus, you will audit the P&L. Because if you audit the P&L, you are aware as to what is going to be the addition. Okay. But when it comes to the restricted reserves, for the restricted reserves, you need to perform some more procedures. Let's try to understand that as to why and how is that going to be relevant. Okay, so let me just extend this. So say for example, our P&L is something like this. Just give me a minute. Okay, let's suppose in the reserves and surplus, one, we have the retained earnings. Let's suppose this is the built up. Okay, so there are retained earnings amounting to 11 crore. Yeah, plus there is a security premium. Okay, and let's suppose this security premium is completely an addition during the year. Or let's suppose there was also some opening balance, whichever be the case. Say security premium balance was 2 crore. Yeah. So all in all, what is going to be the total of reserves and surplus? 11 crore plus 2 crore, 13 crore. So this will be the total. Yeah. Now, for the first part, or you can say for the free reserves, for the free reserves, we have already looked at the audit procedures. Of course, we'll get on to some more audit procedures as around the reserves, but broadly, we have discussed that. Now, how will you audit securities premium? And what should you audit in relation to securities premium? See, the most important audit procedure in relation to securities premium will be what? To ensure that the restriction which was placed in respect of this reserve was adhered to or not. Because there could be a compliance problem. Yes or no? There could be a compliance problem. Yeah. So that becomes an important activity in this case. Okay, so that becomes an important activity in this case for the securities premium. And that is to check the laws and regulations attached to this. Okay, so again, we are getting back to the same point. And what was that? Over and above accounting, there will be some regulations. We need to ensure whether all of those laws and regulations have been complied with by the company or not. Okay, yeah. So this part we need to ensure. So I would say this part become all the more important when it comes to reserves like this. When it comes to reserves like this. Okay. Yeah. Now, Now, till the time you don't have a clarity of what these laws and regulations are, which apply to security premium, can you check that? Can you verify that? Can you examine that? What do you think? Tell me. Tell me, what do you think? Can you audit that? Can you verify that? What do you think? What is your thought process? Priyanshi says, sir, in short, auditing is all about ensuring the reliability of information, whether true or not, and to check there should not be any fraud or misstatement. Of course, of course. Yeah. And when it comes to the fraud or misstatement, you should say something which is material. Yeah. So that is something which will also get attached to that, something which is material. Yeah. Okay. All right. So now I think we have discussed this entire approach which you need to consider. We have also tried to understand as to why it becomes important. Okay, because what should be audited, how should be audited, both of them need to be taken care of. Okay, yeah. Now when it comes to both these reserves, free as well as restricted, what we will do now is we will now go through some of these legal requirements, go through some of the auditing procedures based on that. Okay, so that you can also get a sense of what all audit procedures could be there. Of course, some of them we have discussed, but what more audit procedures could be there. Okay, and please remember the focus, because you may have a question, sir, in the exam, if let's suppose we remember five types of audit procedures, some which are, let's suppose, some which are based on AS, means accounting, some which are based on laws and regulations, and some which are in respect of essays. So in such a case, when it comes to items like this security premium, okay, so if you write down a procedure that you have checked the calculation of security premium, you have checked the computations, okay, you have traced this balance, all of these are not important audit procedures. See, anything is important, but that is not considered to be the most important or the most relevant one. What is going to be the most important one? That will be the laws and regulations. Yeah, because that is where the risk is possible. That is where you need to take care of the risk. Okay. Yeah. Clear on this? Okay. Priyanka is asking, sir, if wrong amounts in previous years were there, then the reserve and surplus, what should we do? Then there are two things you are required. The amount which was incorrect in the previous year, you need to rectify that, because that's an error which has taken place in the previous year. So you'll have to rectify that. But previous year's financial statements are gone. You can't change that. So you'll have to rectify that in the current year. And that is what you call as prior period item. Under accounting standard, there is a concept. Okay. That is what you call as prior period item. So you'll have to rectify that. So I'm talking about the management perspective, because this is not the responsibility of the auditor. This is the responsibility of the management. Management will have to do. As an auditor, you'll have to check whether that error has got rectified or not. And the accounting is in line with what the accounting standards require for such type of error. Okay. Clear on this? Yeah. So as an auditor, this is something you are required to do. Clear on this? Yeah. Any more questions? Any more doubts on this? Everyone clear? Yeah. Okay, great. So I'm just hoping that you are getting the perspective on. So that's the whole idea of getting into all of these presentation on the screen. Okay, putting down all of these figures and then sort of trying to get into the audit approach. Okay, I have not really discussed the audit procedures in detail so far in relation to reserves and surplus, but I'm just hoping that you have been able to now understand the approach. See, the approach is most important. There are so many audit procedures which are listed down, which we'll also read through. Okay. But if you can get clarity over the approach, then you will not have to mug up all of those audit procedures. You will be able to write down those audit procedures yourself in the Excel. Okay. Yeah. So I'm just hoping you're trying to reach that stage, or maybe, somewhat reach that stage. But any questions, any doubts, if you still have, please ask me. Yes, over to you. Over to you. Any questions, any doubts, if you have, please ask me. Yes, over to you. No, sure, clear. All right, so now let's look at the audit procedures, okay, which are listed down, of course. Okay, so now, in respect of reserves and surplus, these are the audit procedures. So we'll just read through these audit procedures. Okay, so Priyanka says, sir, in the study material, lean years given, what it means. I'll have to just maybe, look at that particular wording, or you can just let me know as to where are you reading that. Priyanshi is asking, sir, this subject seems so easy and also conceptually clear, then why students? See, that is only when you take an approach of not trying to get into the concept. Okay, I would say that your point is absolutely clear. This subject can become quite easy for everyone only and only when you try to get into the conceptual understanding. And that is only possible when you try to get into the practical aspects. See, the moment you think it's a theory, and maybe towards the end you just need to mug up few important points, few important chapters, that is where this becomes, too difficult. But if you believe, no, I'll just try to get into the concept, and for getting into the concept, you have no choice but to understand its practicality. Then, of course, you will not be required to mug up most of the things. And you will get the clarity, and that will also bring in the simplicity. I think, which you are also sort of observing, hopefully. Yeah. So it's good, Priyanshi. All right. So now let's try to look at the audit procedures. Now, for reserve and surplus, as we discussed, first of all, what will you do? You will have an opening balance. So trace and tally the opening balance to previous year's audited financial statements. Simple procedure. This is something you will not do only for reserve and surplus. This is something as an auditor you will do for all the line items of the financial statements. In the financial statements, there are two periods, current year and the previous year. Previous year's figures are picked up from the financial statements which were reported last year. So therefore, all those numbers should be ticked to the financial statements which are going in the current year and wherein you have reported the previous year figures. Yes or no? Yeah. So, of course, we are reading this point here, but you should also understand that this point will not be limited to reserve and surplus. This will apply to every item. And forget about balance sheet P&L. Anything which is there in the financial statements, which belongs to the previous year and which you are reporting in the current year. So you need to ensure that last year when it was reported, am I reporting the same thing or is there any deviation from that? This is what you call as tracing the figures to the last year's financial statements. Clear? Yeah. Okay. Then this will also sort of take care some of the assertions. Okay. So alongside, you should also be looking at the assertions. Okay. Yes, that's great, Priyanshi. Now, what is going to be the next step? For any addition in the reserves during the year, for any deletions means either the balance will go up or will go down. So this is what you are calling as addition or deletion or utilization. So for any such increase or decrease, what do you need to ensure? Reserve and surplus balances that were supposed to be recorded have been recognized in the financial statements. You will ensure completeness and in the correct period. That means cutoff. So we'll trace the movement of reserves. What does it mean? In the P&L, if you remember, we had this profit of 1 crore. Yeah. So you need to check whether the company has taken 1 crore to reserves or maybe company has picked up, say, only 80 lakhs and 20 lakhs has not been picked up. That could be an error. Or maybe company has picked up 1.2 crore as against 1 crore. Correct? Why? Because any addition or deletion means any addition reduction will come from the P&L, of course. Then verify the resolution passed by the board of directors regarding the recommendation of dividend. Resolution passed by the shareholders declaring the dividend. Now, the reserve amount can also get reduced if the dividend has been declared. Yes or no? So, any sort of utilization will have an impact on the reserves balance. It will cut down the closing balance. Yes or no? It will cut down the closing balance. So that's why it becomes important that such utilizations, of course, you'll look at arithmetically. In the balance sheet, you will check, okay, there is a dividend. Let's suppose 1 crore is the profit. There is a dividend of 20 lakhs. So 80 should be taken to the balance sheet. Understood. But whether that 20 is correct or not, whether that 20 is actually dividend or not. So that again you'll have to verify. Yes or no? Yes or no? Because that 20, if let's suppose is not dividend, that is something else. That's an error. So that will also make the closing balance, sort of incorrect. So that you need to take care. So how will you take care of that? So you'll have to ensure that this dividend, whether this is correct or not. And how will you verify that? The best thing to check will be the resolution of the board of directors. Yes or no? Yeah. So this resolution as an auditor, you will check. Yeah. Now for this, you will also check the accounting of dividend. Okay. Now, dividend is not something which is supposed to be recorded till the time it is not approved. So, in the financial statement, you will not see dividend. There will only be a disclosure. Now, as regards security premium, it needs to be confirmed that company has issued shares in excess of nominal value, and for the same, what do we need to check? Again, company will have a complete scheme of issuance or for issue of shares, and before doing any such thing, internal approvals are important. See, all of these transactions that we are talking about are in relation to share capital reserves. Okay, so they are important in the context of the internal approvals. So therefore, how do you check that? You look at the internal approvals of the company. And what do you mean by looking at the internal approvals of the company? Looking at internal approvals of the company means looking at their board resolution or if at all shareholders resolution. Yeah. So all of those documents you are required to look at. So that's how you get to know about it. Okay. Yeah. And as of course we discussed that when it comes to an item like security premium, you'll have to go check, okay, whether that security premium is within the regulations or not. What do you mean by that? Means looking at the attached compliances. I think we spoke about it in the previous session. Okay, because this is already covered in the share cap, right? So now, as far as audit is concerned, of course, all of these procedures are important. But if let's suppose somebody has to point out which out of these procedures will be the most important one, then of course, because the nature of this item is such, so it has to be in the context of the compliances which are attached to that. Means these regulations. Okay, so as an auditor, if you don't really check that, then a big thing gets missed out. And therefore, as an auditor, you need to ensure that this has been taken care of. And therefore, as an auditor, you need to write down this audit procedure. So this particular audit procedure becomes all the more important for you. Then it comes to the disclosure requirements. Now, when it comes to the disclosure requirements, so of course, as around the disclosures we have discussed, that disclosures are all about ensuring compliance of Schedule 3. Yes or no? Compliance of Schedule 3 means to check whether the presentation in the balance sheet is what Schedule 3 requires. On the top of it, some of the disclosures will also be required to be given in the notes to accounts. Okay. And where do they come from? They come from the requirement of accounting standards. So therefore, another procedure for presentation and disclosure means to take care of that assertion. Now, please remember, every time you look at the procedure, you'll see there is one assertion which is attached to that. Okay, so please don't forget that. That is again very, very important to be considered. So I can see one query coming from Ashpreet. Ashpreet is asking, sir, is there any different audit procedure for security premium of forfeited shares? Yes. Let's try to understand what is that different audit procedure. See, any transaction which is there, as an auditor, you will decide how you want to check that. Okay. So I'm not getting onto the extent. I'm assuming that as an auditor, you are believing this transaction is significant and you are applying all the procedures. Now, if let's suppose during the year shares are forfeited, so what will you check? Or will you check this or not? Yes. How will you check this? You will have to look at some documents through which you can substantiate that yes, there was a forfeiture. There was forfeiture. And for such forfeiture or for such a requirement, company will have some documentation. Yeah. Generally, the resolutions वगैरह will be there. Correct? Next, in relation to any forfeiture, as an auditor, you'll have to then go down to the legal requirement, means the requirement of the Companies Act. You'll have to check that, correct? So, as an auditor, you check whether that legal requirement means whatever Companies Act requires for any sort of forfeiture, what is that requirement? Okay, so whatever is your understanding, you will also apply to that. Yeah. So according to the transaction, your procedures will be incorporated, or you can say your procedures will keep on evolving or keep on changing. So that's how you need to consider this. Clear, Ashpreet? Yeah. Okay. All right. So moving further. So I think we were talking about disclosures. Okay. So for the disclosure, your procedure will be very, very simple. Whether the following disclosure requirements of Schedule 3 have been complied with. What is that? Segregation of reserve and surplus into different categories. Now, again, the categories could be various. It could be capital reserve, capital redemption reserve, security premium, okay, debenture redemption reserve, revaluation reserve, shares, option outstanding account, or any other reserve. Now, please remember, if in the exam you don't understand this requirement, you will not be able to write down this audit procedure. Okay. And again, the expectation is not that you need to remember this verbatim or you need to remember everything as it is, but at least some clarity you need to have. And for all of these presentation requirements, for all of these disclosure requirements, the best way would be to go through the financial statements. See, if you go through the financial statements of one or two company, that's it. You will get a clarity of what all presentation requirements are there. Again, they may not match exactly with what Schedule 3 requires, but you don't need to match each and every word, each and every sentence. Yeah. So that's how you need to structure this. That's how your approach should move as far as designing of audit procedures are concerned. Okay. Yeah. So now continuing on this, then the next part will be about the surplus, means any balance which is flowing from the statement of P&L, any reserve which is specifically represented by earmarked investments. Again, it's talking about any sort of restricted reserve, or if at all in the statement of P&L there is a loss, or eventually you can say that the reserves are negative, then of course for that part again you'll have a debit balance of the statement of profit and loss. Yeah, so this is all talking about that presentation requirement depending on the type of situation the company might be into. Okay, yeah. So as regards reserve and surplus, these are the audit procedures. Now, before we move on to the next item, please let me know if you have any questions, any doubts. If you have, then we'll move on to the next item. Next item is quite important, and there are some very interesting procedures which are attached to the next item. But before we get on to that, any questions, any doubts, if you have, please let me know. Yes, tell me. Any questions, any doubts, if you have, please let me know. No? Clear so far? Sure? Everyone clear? Yeah. All right. So now Let's move on to the next item. So now we will discuss borrowings. Okay. Borrowings. Borrowings is something which is very common. Everybody understands what a borrowing is, the nature of the borrowing. Yeah, so this is not different for anyone. So can you give me some examples of borrowings which would be there in the financial statements? Some examples for the borrowings. Over to you. Okay, Bhumika says long-term loan. Prem says debentures, bank loan. Okay. Almas says loan, debentures. Okay. Bhumika says debentures. So you are talking about long-term loan. Similarly, there could be a short-term loan. Yeah, now again, long-term loan, short-term loan could again be of different categories. So what could be the types of the loans a company may have? Cash credit could be there, overdraft could be there, term loan could be there, business loan could be there. Yeah, again, vehicle loan could be there. Now these loans again could be of different types. Yes. Now when it comes to the borrowings, now for the borrowings again, a lot of procedures are required to be done. But for the borrowings, what we will try to do is we will try to look at some procedures from the accounting perspective first of all. Yeah, because I think that will become very easy for you to structure. Great Prem mentioned that, sir. You can also have this categorization of the borrowings into secured and unsecured. Very good. In fact, that is also the presentation requirement. Yes or no? For all the loans which are there, what are secured, what are unsecured, that's the presentation requirement also. Similar to what you have for current and non-current. Yeah, short-term, long-term, which you are mentioning. Yeah, so for all the types of loans, you'll have to classify what is current, what is non-current, what is secured, what is unsecured. Yeah, so this is something you'll have to do for all. Okay. So now what we will try to do first of all is we'll try to look at the accounting requirements of borrowings to begin with. Because in relation to borrowing, another item which gets attached to this is the interest cost. Yes or no? Yeah. So if you talk about the interest cost or the finance cost, that is linked to the borrowing. That is linked to the borrowing. Yes or no? Correct. So therefore, what we will try to do is we'll try to pick up both these items as far as their accounting requirement is concerned. And using that accounting requirement, we'll just try to think what all procedures will be there. And after that, we'll move on to the auditing standards. And then last, we'll pick up the regulations over here because regulation is again important, but we can have a lot of procedures through accounting and the auditing standards itself. Okay. Yeah. But I think we can take a break now before we move further on this. Okay, any questions, any doubts? If you have, you may let me know. Otherwise, we can take a break now. All right, so let's take a break. Yeah, Divya. So it's a break now. All right, so let's continue. Okay, so we were discussing borrowings and now we will move on to the audit procedures. But I can see some queries coming up. Just a minute. Okay, so Bhumika is asking, sir, please help me to frame answers for questions. Uh, in spite of understanding the provisions, I don't get how to answer the questions. Yes, I can understand this point that you have been able to understand the concept. Okay, but still you struggle. Or maybe you have this complete clarity, but still you struggle that what should be my answer. Okay, so there are two things in this. Okay, so that's how you need to understand this. One, when you are saying you have the understanding, okay, for example, if you talk about borrowings, so you may be thinking that you have an understanding of the borrowings, but do you really think you have the understanding of the audit of the borrowings? Means this is how you will audit, because that strategy, that procedures you need to think through. See, one point is that everything is there in your mind, but you are not able to write it down in an appropriate manner. Means you are not able to put down in the language, or maybe some of the technicalities you are not able to put down whenever you try to write down. Okay, so because if that is the gap, it can be understood. Okay, and I won't really say it's a gap. Got my point? So if you think that you are able to structure the audit procedures in your mind, audit of borrowings you can think through in your mind, you have that clarity in your mind, then putting it down on a piece of paper can be easily done. We'll discuss about. But if you believe that you have the understanding of the borrowing, but you are not able to think through how to audit borrowings, then it's a big gap. Okay, that is something again we are also trying to cover. So both the things we are trying to cover here. Okay, but you need to assess as to where you stand today. Bhumika, clear? Yeah. And you can of course let me know where do you think you are right now into in this stage. You don't know audit of borrowings, or you don't know how to write down the procedures related to borrowings. Okay. Now moving further on the borrowings. Now see, as regards the borrowings, if you talk about accounting, yeah. Now for the accounting of borrowings, do we have any accounting standards? The answer is yes. But those accounting standards deal with borrowing cost. Yes or no? They deal with borrowing cost. ये भी भरते हैं. As regards the borrowing cost, we discussed for accounting, there again will be two aspects, borrowing and borrowing costs. Yeah. So now we need to take care of both of these aspects. So how will you record a borrowing? A loan is taken from the bank and you'll record it. And for the recording of the borrowing, we understand there are two criterias. What are the two criterias? We talked about it, that those two criterias require some sort of presentation into secured and unsecured, into current and non-current. And again, depending on the classification, for example, OD you'll show as OD, term loan you'll show as term loan, business loan you'll show as business loan, vehicle loan. Yeah. So this is something we get to know through the understanding which is obtained. Yes or no? So that's the first piece to this. Now, talking about the second piece in relation to the borrowings, because we are talking about the accounting. So that's why presentation and disclosure need to be considered. Correct. Yeah. And in fact, some of these points that we talked about just now, they were what? They were largely in relation to the presentation and disclosures. So that also needs to be thought through. That also needs to be looked at. Yeah. Okay. So this again becomes important. Yeah. So what I'm trying to do right now is I'm just trying to put down some of the points. Okay. And for example, just now one of you mentioned that, sir, it's difficult for me to write down the procedures. So what should you do? First of all, collect various points which are possible, through which you will generate the procedures. You will be designing the procedures. Okay. So first of all, bring in all the points at one place. Yeah. Then on the borrowing cost, how will you record it? You look at whether the asset is a qualifying asset or not. Because depending on that, either the borrowing cost will be capitalized or not. This can have an impact on the accounting. Yes. So this consideration you'll have to give. Now, each and everything which the management is required to do as far as the accounting is concerned. What does it mean? It means as an auditor, you also need to take care whether the management has done that or not. Yes or no? As an auditor, you also need to take care of that. Yeah. So that is something again very, very important for an auditor to look into, for an auditor to take care. Okay. Now, what is the next point you look at as an auditor? If you talk the accounting requirement or some sort of compliance requirements, I'm just bringing some part to it, that it's about the repayment. Yeah. So when you are talking about borrowing, so you are talking about opening balance, additions, repayments. In fact, we can make all of these as points: opening balance, additions, repayments, and closing balance. Correct. So this can be another category which we'll consider for designing audit procedures. Okay. How will that be relevant? Let's try to understand that. First of all, in relation to the in relation to the additions, what will you do? Management would record that as a new borrowing. Yeah. So as an auditor, how do you check whether a loan is taken or not? Can you tell me? Can you tell me? As an auditor, how do you check as around any loan? Tell me. As an auditor, how do you check that? How do you check that? Yes, quickly. How will you verify about any loan, any borrowing? Tell me. Very good. Bhumika says, look at the contracts. Yes or no? So therefore, in respect of borrowings, for the checking of this part additions, what do you need? You need the agreements. They are required to be looked at. Agreements. Okay. Yeah. They are required to be looked at. Yeah. Now, agreement will have various terms and conditions, which are again required to be complied with by the company. And those compliances, if that has got any financial impact, again needs to be taken care of by the management and also the auditor, whether the management has done that or not. Yeah. Another important point which arises in relation to the borrowings. What is that? In relation to the borrowings, another important point which arises is in respect of opening balance and additions. And that is about whether the loan has been utilized for the right purpose or not. Okay. Means if the bank has given the loan, or if let's suppose any loan has been taken for a specified purpose, whether it is getting utilized for that specified purpose or not. Yeah, because it should not happen that a loan is taken for a purpose, say for construction of a building, but it's not getting utilized for construction of building. It's getting utilized for working capital requirements. Okay, so now this is something again one needs to check. But that will not only apply to the additions, that will also apply to the opening balance, means entire amount of loan which is there. Correct? Then, if you talk about the repayments, if you talk about the repayments, now as regards the repayments, okay, so let's put down what are the procedures. Now, you think about the audit procedures as around the repayment. What do you think could be an audit procedure? Yes, over to you. As regards the repayment, what could be an audit procedure? Over to you. What could be an audit procedure as regards the repayment? Over to you quickly. So when it comes to the repayment, yes, quickly. Priyanka says interest schedule. Okay. I think you are talking about the repayment schedule. Is it? I think Prem is also talking about the same thing. Very good. Jendra says verify the bank statements. Tanu says how much is the interest rate? Okay, so now as regards the repayment, means if there are reductions in the loan balances, or if you look at the agreement, okay, for both of these, company will have to take care whether the repayments are in line with the agreement or not. Yeah, so whatever is company supposed to do, auditor also needs to do the same thing. Auditor also needs to do the same thing. Yes or no? Yeah, for the repayment. Now, one, the repayment needs to be, of course, checked through the agreement, because the agreement will have repayment schedule. Agreement will have a repayment schedule. Okay, yeah. So this will have a repayment schedule. That is one. Next, as regards the repayment, next thing, one, you will check as to what is required to be repaid monthly, quarterly, what is the amount. Next, what is it that you will check? We'll check if the company has been making the payments Of course, are these paid as per the repayment schedule or not? Second, are these paid from the bank or not? And how do you verify that? You will verify the bank statements. You will verify the bank statements. Yes or no? Yeah, you will verify the bank statements. Correct? Yeah. So far, if you just look at some of these points that we have been discussing, so many audit procedures we have covered. Yes or no? So just think about it. Okay. What is it that I'm trying to do? I'm just trying to look at the accounting requirement, documentation requirement, compliances requirement, which the company will have, and accordingly, what the company is supposed to do or what the company should have been doing. And as an auditor, I need to just take care of that. So accordingly, I'm designing my audit procedures. Are you able to get onto this or not? So I'm just hoping you are with me. You are able to get onto these audit procedures. Everyone, please confirm. Tell me quickly. Yeah, you have been able to understand some of these audit procedures. Yeah, and of course the approach. Yeah, and just think about the approach. You don't need to mug up the audit procedures. You just need to think through. Okay. Another very simple example for the opening balance. We didn't discuss one procedure for the opening balance. One procedure which will have to be performed will be what? And we discussed that this will apply to all the line items. Trace the balance to previous year's audited financial statements. Yes or no? Yeah. So will you do the same thing for borrowings? Answer is yes. For each and every balance, this will have to be done. Whether it is about borrowings or any other line item in the balance sheet. And which balance are we talking about? The balance pertaining to previous year, which you will have to present in the financial statement as comparatives. Okay. Then moving on to the next part. Now, during the year, some sort of computations will also be done. Yes or no? Now, as regards the borrowings, what are going to be the computations? Tell me quickly. As regards the borrowings, what all computations will be done during the year? Tell me quickly. What all computations you believe would have been done by the management? They must be doing that. Over to you. Over to you. What all computations will be done by them? What all things they will be doing? Yes, anyone? Any computations, any workings you believe would be done by the management? Quickly, yeah. Over to you. Now, as regards the borrowings, one very important point which Prem mentioned is in relation to the finance cost. Yes or no? So when it comes to the finance cost, where does it arise from? We have already discussed this, that this is directly linked to the borrowings. Yeah. So when you check the borrowings, so of course borrowing cost will have to be checked. And what is going to be the prime borrowing cost? Sorry, prime cost. That is interest, of course, because interest will have to be payable in respect of various types of borrowings. Now, those interests in respect of various types of borrowings which will be there will be calculated by the bank or the lender, whoever is the lender. But that calculation of interest would have been done by the management also. Yes or no? So every time any interest is payable, so that calculation will have to be done by the management also. Yeah. So as an auditor, what will you do? You will get on to the computations. Okay. So another audit procedure will be what? Verification of workings of interest cost, or you can say computation, which is done by the management. Yeah. You will verify that. Yeah. You will recompute or whatever you want to check on that. Yeah. For checking this again, what do you need? For checking this, you'll need the loan agreement to ensure that interest is being paid at the correct rate or not. Interest is being paid in line with the agreement, in line with the understanding which is there with the bank. Yes or no? Yeah. Another thing, when it comes to the agreements, particularly in respect of borrowings, particularly in respect of borrowings, sometimes some of the covenants get attached to them. Now, what are the covenants? Okay, which is seen in case of borrowers. Sometimes covenants get attached to them, which is seen in case of borrowings. Now, what do you mean by covenants? You can say some sort of requirements or compliances are placed by the lender on the borrower, that you need to maintain this much current ratio, whatever is your stock balance, that should have some, okay, so some of the minimum requirements are placed by the lender. And if there is a non-compliance of these covenants, then you can say it's a breach of the agreement. It's a breach of the agreement. And due to the such breach of the agreement, there could also be some financial implications. So as an auditor, it becomes important, therefore, that when you review the agreements, okay, so review of agreements is extremely important. That when you review the agreements in respect of the amount borrowed, in respect of the interest rate, in respect of the repayment, in respect of the schedule which is there, you also cover this aspect related to covenants. Okay, yeah. So this again becomes important. So that's why one can say that in respect of borrowings, agreements become a very, very important part. They play a very, very important part. Okay, yeah. So they become very, very important. Okay, clear? Yeah. All right. So now moving further. So far, some of these procedures that we have discussed were in relation to the accounting we thought through, in relation to the documents we thought through, in relation to some of these were in relation to that. Now, further to this, what will you do? Now, further to this, another thing which becomes important is the confirmation. Okay, in fact, now we are picking up the most important part, or you can say the most important audit procedure as far as this line item borrowings is concerned. Okay, so you can just mark this as most important. And what is that? Confirmations. Okay, so let's talk about confirmations. Now, what do you mean by confirmations? Can anyone explain if you have some understanding about the confirmations? So, what is the requirement of confirmation? How does it help? Or maybe any thoughts that you have in respect of confirmations? Anyone? Any thoughts that you may have? Over to you, quickly. As regards the confirmations, any thoughts, any understanding that you may have? Over to you, quickly. I can see some responses coming up. Very good. Okay, so Prem says external confirmations are required to be taken from the banks or the lenders. Varsha says we can confirm the details from the internal management. Again, very relevant point. So I think over here you have touched upon two aspects. Okay, two aspects. So let's discuss both of these aspects. What is the meaning of confirmation? So let's suppose there are two parties, A Limited, and let's suppose there's a party bank. Okay, let's suppose these are the two parties. Now, this is a very, very important procedure. Please understand. And also important from the examination perspective. Okay, so hopefully you would have understood the relevance to this. And this procedure that we are discussing will not only be relevant in the context of borrowings, this will also apply to some other items of the financial statements that again we'll talk about. Okay, that again we'll talk about. Sorry. So let's try to understand about confirmations. So let's suppose there are two parties, A Limited and bank. Now A Limited, let's suppose, has taken a loan of 100 crores from bank. Fine. Yeah. Now, as far as this loan balance is concerned, A Limited must be having some process internally. Okay. So we are talking about the management side right now. Don't think it from the auditor's perspective. Of course, everything which the management is required to do, auditor needs to check. Yeah. So let's think it from the perspective of the management. A Limited internally should have a process of confirming these balances with the external party. Now for A Limited, who is the external party? Bank. Okay. So this management should have an internal process. So I'm calling it as internal process. So they should have one internal process of what? Internal process should be there for checking that the balance which they are recording on a timely basis, means every quarter, every 6 months, every year, whether this balance is reconciled with the bank or not. Okay. So this internal process should be there in respect of reconciliation. Reconciliation means reconciling these balances with the bank. Okay, so this process should have been there. Means in relation to the reconciliation, this process should be there. Yeah. and the management must be doing this, or they should be doing this. Yeah. Now let's bring in the auditor. Auditor needs to check whether the management is doing this or not. Yes or no? So what will become the procedure on the part of the auditor? Whether the management is reconciling all of these balances on a periodic basis. Periodic could be every quarter, every month, or maybe every year with the external party or not. And how will this be reconciled? How will this be reconciled? So the company will obtain a bank confirmation statement, or maybe the bank statement from the bank, and will ensure that whatever balance bank is showing is also shown by the company. This is something which the company should have been doing. Yes or no? This is something which the company should have been doing. Right? If the company is not doing this, is that a problem? The answer is yes. Why? Because if the company is not confirming with the third party, then how will you ensure that the balance is correct? Yes or no? If you ask the management that how do you ensure that the borrowing, let's suppose you have currently recorded at say 85 crore, which is principal plus interest. So how do you ensure that this is exactly the amount which the bank is showing as receivable from you? Will the management have any mechanism? So management can always say that we have our independent computation, but is that also confirmed by the third party? No. So that brings in two concerns. One, its completeness, and of course, the accuracy, means the valuation. Understood? So what gets challenged? Okay. So the balance, the recording could be inappropriate, could be incorrect. Yeah. So that needs to be fixed. Yeah. So now, in relation to this, therefore, it becomes important that auditor performs a procedure in respect of the reconciliations which the management would have obtained, and if at all there are any reconciling items, what are the reasons of those reconciling items? If the balances are matching as it is, then it is absolutely okay. But at least this process and checking of this process through obtaining the bank confirmations, reconciliation statements from the company becomes important on the part of the auditor. Okay, yeah. So is this process, is this part understood by you? Everyone, quickly please confirm. Any questions so far? Tanu says confirmation from the management and bank as well as about agreement. Yes, of course. All of these things would be covered. Any questions so far? Yeah, everyone clear? Any questions, any doubts so far? Over to you, quickly. Quickly, any questions, any doubts so far? Tell me, any questions, any doubts? No? Sure? So I'm assuming that so far everything is clear. Yeah? Now, let's bring in another party over here. Okay, so now in this chart, what I will do is I'll bring in one more party. Okay, so one is the internal process. We have discussed that. Now let's suppose there is one more party. And what is that? Statutory auditor. Now, when it comes to the balance confirmation, which the management would have obtained from the bank. It's all internal to the company. So if you look at this entire process, what do you call it as? It's an internal process. It's their internal process. Yes or no? Yes or no? It's their internal process. Yeah. As far as audit is concerned, any external evidence is always considered as more reliable as compared to internal evidence. So when the auditor will go and check this process, obtain the documents, obtain the reconciliations, obtain the confirmations, who is providing this entire information? Tell me, who is providing this entire information to the auditor? Tell me quickly. In this case, who is providing this entire information to the auditor? Quickly, over to you. Quickly. In this scenario, in this process, who is providing the entire information, required documents, required confirmations to the auditor? Over to you. Quickly, please confirm who is providing that. Management. Yeah, Jendra Prem, they are saying management. And the moment we say it's provided by the management, what does it become? That evidence is considered to be internal evidence. And as we discussed, that any external evidence is considered more reliable as compared to internal evidence. So we are not saying internal evidence is bad or not good enough. But of course, external evidence is considered to be more appropriate. Okay? External evidence is considered to be more appropriate as compared to internal evidence. Yeah. So therefore, now, what is the next step that the auditor will do? Auditor will now move on to the external evidence. So what does it mean? Auditor will now communicate with the bank directly. Okay, so now what will happen is auditor will communicate with the bank directly. So this process which the management would have done, auditor will also do this independently. So in this process, what will the auditor do? So let me just call it as external confirmations. Auditor will obtain confirmations from the bank. And you may be thinking, but sir, these are already obtained by the management. So how is it different? It is different because now the confirmations which the auditor will obtain will be direct. So therefore, let me just call it as direct confirmations. Okay, so now the auditor will obtain direct confirmations from the bank. Yeah, and I think somebody mentioned Prem positive confirmation aspect. Of course, so but I'm not getting into positive and negative. We'll come on to that aspect maybe slightly later. Okay. Now, what is the meaning of obtaining direct confirmations from the bank? Let's try to understand this. See, in this process, auditor will request the banker. So what is the request which auditor will place to the banker? That in respect of A Limited, whatever is the outstanding balance in your records, means in the records of the bank, please confirm that to me directly. Means auditor will ask the banker that please don't respond to the company, respond to me directly. Why? Because then the documents, the confirmations which the auditor will obtain will become external evidence. And as we discussed, that will be considered to be more reliable. It doesn't mean that in such a case, this procedure, okay, or this process should be ignored. No, that will also be done by them, because that is again responsibility of the management. That is again placing controls in respect of various activities, which is the job of the management. So they are supposed to do this. Okay, they should have been doing this. Yeah. So now in this case, now let's try to get into this process as to how does this process works. So in this case, first of all, auditor will roll out a confirmation letter to the bank. But please understand, the banker is not a party of the auditor. So no. Can we say it's the party of the auditor? No. Banker is actually a party of the company. Yes. Because the company and bank are transacting with each other. So therefore, before corresponding anything with the bank directly, auditor will have to reach out to the management. Yes or no? Yeah. Auditor will have to reach out to the management that this is something I am going to do. And therefore, the confirmation letters which the auditor will roll out, those will be prepared on the letterhead of the management. Now you may be thinking, but sir, those were supposed to be sent by the auditor and obtained by the auditor directly. Yes, but the letters will be the ones which the management has in a way approved. Okay, wherein it will be specified that the balance needs to be confirmed to the auditor directly. Clear? Yeah. So it will be specified over there. Clear? So now let's put down the activities. So the first activity is roll out the balance confirmation letter. Okay. So that's the first activity. Roll out the balance confirmation letter. Okay. Now, once this is done, so we'll have to understand that how will this be done? Who will send that? This will have to be sent by the auditor directly. So auditor from its own premises, from its own office will send these letters to the bank. Okay. So who will send these posts? So these will be sent in hard copies. Yeah. So therefore we can say roll out the balance confirmation letter directly by the auditor. But of course, before that, this would have been discussed, approved by the management. That's why it's on the letterhead of the company. Fine. So this is step number one. Now, let's suppose once this is done. Now, what is going to be the next step? Now the letter will reach the bank. Okay. Now, once the letter reaches the bank or maybe various banks, two situations are possible. Two situations are possible. First situation is bank responds. Second is bank doesn't respond. So let's talk about the first situation. If the bank responds, so the bank will respond to the auditor. So auditor will verify whether the amount matches with the records of the company or not. Okay, so the auditor will verify whether the amount matches with the records of the company or not. Yeah. So this is what the auditor will verify. If that matches, it is absolutely okay. If that doesn't match, Then the auditor will ask the management to reconcile. Okay, yeah. So here again, two situations are possible. Balance matches, otherwise reconcile. Okay, and any reconciliations need to be looked at by the auditor, or if there are any differences, they may require adjustments in the financial statements. Means the accounting entries may have to be booked. Okay, only these two situations are possible. Correct. Now this question arises: what if the bank doesn't respond? That is also a possibility, that the confirmation has been sent, but the bank doesn't respond. In such a case, what will the auditor do? Then the auditor will send a reminder. Then the auditor will send a reminder. Auditor will send a reminder. Reminder to whom? To the bank. So how many reminders will be sent? See, this is something which is quite subjective and depends on a situation to situation. And that also depends on the time limit which is available in respect of audit, and of course on the criticality. Yeah. Generally, 2 to 3 reminders are sent, and generally these confirmations are obtained within those reminders. Okay. Yeah. So now, how would those reminders be sent? That, of course, will be in the hard copies. In some of the cases, on an exception basis, considering the time limit, which may not be there, email confirmations over email may also be sent. Yeah, but whether the bank respond or doesn't respond in both the cases we discussed, eventually the confirmations will have to be obtained. And once the confirmations are obtained, two situations are going to be possible. A, balance matches. B, balance doesn't match. If the balance matches, it's good. If the balance doesn't match, reconciliation will be required. Okay, clear on this, everyone? Yeah. So this is something that we call as independent confirmation procedure, or you can say direct confirmation procedure. Yeah, so therefore, we can say now in a way that this confirmation has got, sort of two types of activities. One which is internal to the company, second which is external. Now, external or internal, from the auditor's perspective, both are important. Okay, from the auditor's perspective, both are important. Yeah, clear? Any questions, any doubts if you have, please let me know. Over to you. Any questions, any doubts that you have, please let me know. Over to you. Quickly. Prem says everything clear. Very good. See, as a next step, now what we will do is, because we have discussed a lot of procedures as around borrowings, as around borrowing costs as well, as around accounting requirements, as around some of the compliances, as around some of the procedures specified by auditing standards. Okay, so we can say collectively we have used all those strategies. In a way, these three are tools. Okay, so every time we'll have to design an audit procedure. What do we use? We have three tools. Please remember that. In the exam, you need to remember this, that you'll have three tools to use to structure, to design your audit procedure. So we have used everything. Okay. Now, what we will do is we'll flip through all of those audit procedures which are there in the study material also, and we'll just try to sort of check as to how will you put it down in the form of maybe the language which is required to be written. You may not exactly match with the same language, which is okay. Yeah, but before that, if there is any question, any doubt, please let me know. I'm just hoping everyone is clear. I think one of you mentioned that, sir, I'm able to understand, but I'm not able to put down some of these things in the form of audit procedures. So I'm just hoping that to a certain extent, you would have been able to now sort out that sort of problem also. Yes, please confirm. Over to you quickly. Clear? All right. So now let's get on to the listing of the audit procedures. So we'll just flip through that. We'll just read that. That is again important because you'll get some insights as to how do you write along with the assertions, and you'll also be able to relate to some of the procedures that we have discussed today and what all assertions they are covering. Yeah. Now, as regards the borrowing balances in terms of their existence, means whether they represent valid claims by the banks or the third parties. So what will you do? Review the board minutes for approval of new lending arrangements. And please remember, there's also one aspect of rights and obligations. Yeah. So now, because it's a borrowing, it's a liability. So therefore, company has an obligation over here. And how is that obligation established? That is established through an agreement. So if you review the agreement or if you check the agreement, then you are taking care of that assertion related to obligation that anyways will be looking through. Yeah, but again, just to get some insights. Okay. Now, because obtaining borrowings is considered to be a significant activity, important procedure on the part of the management. So that's why there has to be a board approval. If the company wants to go in for loans, obtain the loans, so there has to be a board approval in place. Okay, so you need to review the board minutes for the approvals of the new lending agreements. Yeah. Next, agree the details of loans records to the loan agreement. Means review the loan agreement to verify whether the loan amount is as per the loan agreement or not. Verify that the borrowing limits, if any, imposed by the agreements are not exceeded. Okay. Roll out and obtain independence balance confirmations. So this is again something we have already discussed. Yeah, but I'm just hoping that you're now getting the clarity as to how will you put it down in the form of an audit procedure. Okay. Then, if let's suppose there's a loan which is in the nature of leases or hire purchase through which you get an obligation, then you'll have to get on to the specific type of agreement or the contract which is in place. Okay, we'll have to look through that specific contract or the agreement, and accordingly whether that accounting has been done, and accordingly whether that liability has been recognized in the financial statements by the management of the company or not. Okay. Next, in case of debentures, now let's suppose if there is a borrowing which is in the nature of debentures, then some of the compliances which could be in relation to trust deed for terms, dates of reduction, restrictions on the borrowings, covenants compliances. Okay, these need to be looked through. When the debt is retired, ensure that a discharge is received on assets securing the debt. Obtain written representations. Now, this is again a procedure which is very, very common to all the finance. See, all of this accounting, all of these compliances is the responsibility of whom? Management? Yes or no? It's the responsibility of the management? Yes or no? Everyone, please confirm. It's the responsibility of the management. Yeah. So therefore, towards the end of the audit, auditor obtains a representation in writing from the management. That representation is obtained in writing from the management. And what is that? That representation talks about all of these accounting compliances which have been done by the management. So management will give in writing that this is something which we have done, on the basis of which financial statements have been prepared. Okay, so therefore for borrowings, that point will be specified in the representation letter, that is called as management representation letter. You would have understood that, huh? Then, as far as the accounting of the borrowings is concerned, now whether that is complete or not. So what will you do? Again, you'll have to look through the agreements. For that, agreement is an important procedure and the relevant procedure, wherein you'll look at the types of borrowings, whether those are short term, long term. Okay, what is the outstanding balance? Okay, what has been the movement? What was the opening balance? Any addition, any deletion which has taken place during the year? What all repayments have taken place? Whether that is in line with the agreement or not, and that is how the closing balance has been derived. So you can say it's all about the computation of the balance of borrowings. Okay, so that's all about the computation of the balance of borrowings. In which case, again it needs to be looked at through what? Agreement. Yeah, wherein the auditor will perform the following procedures. Consider any evidence of additional debt obtained through examination of minutes. So let's suppose there's a borrowing, uh, or let's suppose you come across an amount which is there in the board minutes for which no agreement is available, and you don't see that getting recorded in the financial statements. Okay, so how will you get to know about it? Through the internal documents of the company. And what will those be? Minutes of the meetings of the board of directors. Yeah. And of course, the confirmations which you'll obtain from the lenders. Yeah. Then review the subsequent transactions after the reporting date to determine if there are any unrecorded liabilities at the year end and transactions are recorded in the correct period. Now, what do you mean by this? So it's all about cutoff. Let's suppose 31st March 25 is the reporting date. There is a borrowing which should have been recorded in financial year 24-25. Okay, so there is a borrowing which should have been recorded in the financial year 24-25. But what do you find? You find that such an amount is not recorded. No, it's a risk. Yeah, it's a risk. But how do you get on to that point? So you may be thinking that I have reviewed the board minutes, I've reviewed the agreements, I have performed inquiries with the management. Still, is there anything else that I can do on the basis of which I'll get to know about it? The answer is yes. And that is about checking the subsequent period. So from 1st April, say, let's suppose 10th April 2025, or maybe any period which is taken subsequent to 31st March. During this period, auditor will look at the liabilities which are recorded by the company. Okay. Now, those are recorded in the books of accounts. But in those cases, what is it that auditor will try to check? Whether those should have been recorded in 24-25 or not. See, those are recorded in the books. So recording in the books is not a problem. What is the problem? Whether that is recorded in the correct period or not. Because that will ensure completeness for 24-25 as well as the cutoff for 24-25. Yeah. Yeah. Okay. So now you may be thinking, but sir, audit is for 24-25. Then does it mean we'll also start auditing the period for 25-26? The answer is yes. Okay. But it doesn't mean that you will check full 25-26 because you are not waiting for financial year 25-26 to end. You are saying that when you start the audit, so whatever period you are getting in 25-26, okay, at least some part of that period you will review because that can give you some evidence in respect of some of these transactions which may not have been appropriately recorded by the company. So that's the intent, that's the thought process which needs to be looked at by the auditor. Clear? Next, direct confirmation procedure. So I think we have already talked about this. Yeah, so it's all about rolling out and obtaining the independent balance confirmations. Okay, you can call it as external, independent, direct. Yeah, important thing is it has to be direct, directly sent and directly obtained. That's why it's called as independent confirmation. Independent means it has to be independent from the management. It has to be received by the auditor directly. Okay, wherein the reminders may also have to be sent for the scenarios wherein the responses have not been given by the management. Okay, then next aspect is about the amount, whether that amount of borrowing is correct or not. So how will you get to know about it? So you'll have to check the loan balance. Where do you check it from? Loan agreement. Yeah. Computations of the borrowing balance means this entire movement that we discussed. And of course, computation of the interest on that means the finance cost. Yeah. Whether the accounting is in compliance with the accounting standards or not, wherein you'll go check the accounting policy. Yeah, because that is again a very, very important part. Correct? Yeah. Then some of the loan covenants means the terms and conditions which are there, which could have an impact on the valuation. And it means you need to just evaluate if there is anything which, if is not taken care of by the company, over which if there is any non-compliance, it could result in some financial implication. So that is again another aspect which needs to be taken care of by the auditor. Yeah, and how will you get to know about it? See, most of these points which you will understand, auditor will be able to gather from the agreements. Yeah, because when it comes to the loan, two things become important, or you can say which are of prime importance. One is the agreement, second is the confirmation. Of course, a lot of internal workings, calculation, etc. are important. But I'm saying in terms of the supporting document, what do you have? Agreement and of course the confirmation. Yeah, clear? All right. So now looking at some of the aspects, now that could be around the disclosures. Not disclosure again. We have discussed that when it comes to the presentation and disclosure, where do you go? Schedule 3. So this is something which is standardized. In fact, some of the procedures are going to apply to every item. And this could be your strategy for the exam. Remember, if you forget anything in the exam, you can at least write the standard procedure. Ensure that the presentation and disclosure requirements are as per Schedule 3 or not. Even if you don't remember the requirements of Schedule 3, at least this much you can write. Okay, because this is something which the auditor has to do. Okay, wherein if you are able to put down what are these disclosure requirements, it's good. Okay, and these disclosure requirements in itself are quite extensive. Yeah, so for each and every line item, you may not be able to remember everything. Yeah, so don't try to mug up this entire requirement. You will not be able to do that. See, practically that is impossible, because in a way that will mean that you are just trying to mug up this complete schedule 3. If you are able to do that, very good. If you want to do that, you can do that, but that is not really required. At least some understanding you should obtain, which will help you in terms of designing this particular audit procedure as well. Okay, yeah. So I think this is it that we had for today, and similar sort of approach we are going to continue in terms of designing the audit procedures for various items of the financial statements as we move further in terms of our discussions. Yeah. So any questions, any doubts, if you have, we can talk about it, and otherwise we are done for the day. So those who do not have any questions, they can just feel free to log out. Thanks everyone for your time and for this wonderful participation again.
Okay. Thank you, Achal sir. And thank you, students, for your participation. So, students, today we have continued our chapter number 5, which has weightage of up to 20%. So, today we have covered up to the up to the borrowings. The balance sheet captions are going on. The share capital, reserve and surplus, and borrowings are completed. So, before coming to the next class, please revise these 3 topics. And what type of question, generally students ask what type of questions are being asked in this chapter. So the question can be asked is, you can given one situation in which you have to identify the assertion and tell the meaning of the assertions. For example, auditor is reviewing board minutes for the approval of a new lending agreement. The examiner is asking this. So you have to identify that the assertion is existence, and you have to tell what is existence assertion, in which you can write that the all borrowings on the balance sheet date represent valid claims by bank. So another type of question that can be asked is, you can given one situation in which you have to identify the assertion and then tell the audit procedure regarding that assertions. So, and the length of the your answer will depend upon the weightage of the question. Like there are many procedures given in your chapter, so you need not to write all the audit procedure. You have to write according to the weightage asked and what kind of language you can use in this chapter. Like, see, students, for technical words, there is no substitute. Like, if the assertion is completeness, you cannot use synonym for the word completeness. You have to write the word completeness. But in audit procedure, when you are writing audit procedure, you can use your own language for general words, not for the technical words. Okay, because it's not possible to cram these 100 pages. So you have to write your own language, but write the technical words which are given in the study material. Another thing which question students generally asked to, like the only problem of this chapter is for the students is they cannot cram these 110 pages. So you have to understand this chapter. Okay, you have to understand the procedure which Achal sir is explaining really very nicely. So if you will understand what is this assertion, you can use your own words, you can use your own language to write the audit procedure. Okay, so another doubt students are asking, length, that I have told you, you have to see the weightage of the question, then you have to write the answer. I have told you the language. Okay, so our next class is on Wednesday. So before coming to the next class, do revise the chapter and do refer the case study booklet and the model test paper and Saransh. So thank you all. Thank you, Achal sir.
Thanks so much.
Yes, you can.